Hey guys, Bill Soriano here, coming to you live, executive director with Making Wealth Real, MWR Financial, and I want to continue my series that I started a few weeks ago on how to focus, uh, to get you to focus on your finances here in 2021, making that your number one, your top New Year's resolution to focus on your finances. Now, this is going to be lesson 4, which is your number one asset. In lesson 1, I talked about stop leaving money on the table. I taught you in lesson 1 how your biggest expense is not your car payment, your cell phone bill, your internet bill. It is taxes. Okay, and what happens is most people are letting the government take too much tax out of their paychecks every pay, and they're getting that money back at the end of the year, but the government's using it throughout the year to make more money on it, and then they just give you back what they took off you. So we talked about stop leaving money on the table. Lesson number 2 was the banker has a secret. That was the rule of 72. That shows how the bank takes your money in the form of an investment. You give it to them. They pay you an interest rate that doesn't keep up with inflation. They take your money. They loan it out, do various other things with it, and make more money on your money and pay you a low rate of return. So I taught you in lesson number 2 how to start to learn how to invest and how to think like the bank and how to find investments that will outpace inflation. Lesson number 3 was a bloody mess. That talked about credit card interest, how interest is not your friend. Interest is actually the enemy to wealth building. Now in lesson number 4, we're going to talk about your number one asset. And your number one asset that you can actually have in your portfolio is a home-based business. Okay, on average, it is estimated that people that do not have a home-based business on average will overpay in taxes by about $500 a month. Now, obviously, depending on your income, that's going to be more or less, but the average throughout the United States, people without a home-based business will overpay in taxes by $500 a month. Let me repeat that. If you do not have a home-based business, you will overpay in taxes an average of $500 a month. So the purpose of this lesson is to show you how your number one asset is going to be added to your portfolio, a home-based business. And I'm going to show you how even if you don't make any money with the home-based business, or you make a small amount, how it's still going to have a dramatic effect on how much tax you pay. Okay, so because you have a home-based business, you're now going to be able to deduct a portion of the normal expenses that you pay throughout the year. Expenses like your mortgage payment, or if you don't own a home, your rent payment, utilities you pay, cell phone bills, mileage on your car, meals and entertainment, internet bill, right? All these things, you're going to be able to deduct a portion of these expenses, and these are expenses that you're already paying. So these are not additional expenses that you're going to incur because you started a home-based business. These are expenses you're already paying, but you're not getting credit for them because you do not have a home-based business. Okay, now you're able to deduct a portion of these expenses based on what your business use is. So right here with your mortgage. Now, it's very important. First of all, my disclaimer is, before I start this, I'm not an accountant, I'm not a CPA, I'm not a tax preparer, right? So obviously, before you would do any of this, you would consult your tax professional when you do your tax return. But on average, we're going to use certain numbers here to show how you can save on taxes if you have a home-based business. So first of all, with your mortgage, you can't deduct your a portion of your whole mortgage payment, but you can deduct the interest, right? If you don't have a mortgage, you don't own your home, and you rent, you can deduct a portion of your rent payment, your whole rent payment. Now, the portion is determined by what they call the business use of your home. So in this example, we're going to use 20%. So we're going to say, let's say you have 10 rooms in your home and you're going to say that you use two of those rooms in your home for business use. So you're going to be able to deduct 20% of whatever your mortgage interest is and whatever your utilities are on your home, right? Again, these are bills that you're already paying every month. You're just not getting credit for them. You're just not able to take deductions for them. So let's say that you're paying $1,000 a month interest on your mortgage payment. Now you may say, Bill, that's a lot, and that is a lot. Some people are going to pay less. Some people are going to pay more. Basically, if you buy a home for around $300,000, you do a 30-year mortgage at 4.5% interest, let's say, your interest payment, the portion of your payment that's going to be interest for the first few years is going to be around $1,000. Okay. Now, if you pay less for your home, this number will be less. If you pay more, it'll be more. Obviously, as you own your home longer and you're making payments on your home longer, the portion going to interest goes down over the years as your principal comes down, right? But let's just say for this example that you're paying around $1,000 in mortgage interest every month on your home mortgage. You're going to take a 20% deduction or $200 a month, right? At the end of the year, that's $2,400 that you're able to deduct now off of your income, right? $2,400. Let's say your utilities are about $500 a month. Again, that's $100. 20% of 500 is $100 a month that you're going to be able to deduct on your tax return, or $1,200 per year. Okay, now in this example for the cell phone, we're going to assume that we're using the cell phone 100% for our business. So we got another phone in our house, a landline, or whatever you want to call it, and we're going to say we're using our cell phone 100% for business. Now, if you don't use your cell phone 100%, then you have to, you have to adjust it. You have to figure out, what portion is for business. But in this example, to make it easy, we're going to say our cell phone bill is $100 a month, and we're going to deduct 100% of that. So $100 a month, $1,200 a year. Business mileage. Okay, obviously this amount is going to go up and down over the years. 10,000 miles on your car, 56. This example, we're going to use 56 cents. So you're able to deduct $5,600. Meals and entertainment. So you're going to go out to eat normally, right? We're going to say, let's say that 50% of these meals, when you go out to eat, you talk about your home-based business. So you're able to deduct $100 a month or $1,200 a year. Now, internet, we're going to say that we're going to deduct 100% of our internet bill because our home-based business is going to be completely on the internet, right? We do marketing on the internet. It's a web-based business. So we're going to deduct 100% of the $50. Now, most people's internet bill is going to be more than $50. Some may be less, but again, we're just going to use $50 a month. So that's $50 a month, $600 per year. So in this example, you're able to now deduct $12,000 off of your income, right? And that will make you pay less taxes, right? Because you're able to deduct $12,000. This is money that you're already paying out every month. It's not additional money now because you have a home-based business that you have to pay. This is money you're already paying out. So let's just say for this example, your state taxes are 6% and your federal taxes are 24%, for a total of 30%. We're able to save $3,600 in taxes. That is our tax savings. That means that if we do our tax return without a home-based business and we get $500 back, we would have gotten $4,100 back, $3,600 more, had we had a home-based business and been able to deduct a portion of these expenses that I'm showing you on this worksheet. So again, $3,600 in tax savings, right? If you did your taxes at the end of the year and you actually had to pay $1,000, Well, guess what? You would have gotten $2,600 back instead. Okay, so your number one asset, a home-based business. So let's say you have a home-based business. You know, you worked it pretty good. You're still working your full-time job, right? So you did your home-based business part-time, and let's say that you earned $200 a month in income from your home-based business. Okay, so this is your profit. It's $200 a month. It comes out to $2,400 a year. Okay, so let's say you did your home-based business. You made $2,400 a year, right? You didn't work it full time. You did, a few hours a day here and there, maybe 12 hours a week total. You made $2,400 at the end of the year. Now, if you take that $2,400 and we add our $3,600 in tax savings, we now have a total of $6,000 in additional income at the end of the year. Do you get that? That's the $2,400 you made, right, in your home-based business, $200 a month, and then we added in the tax savings at the end of the year based on $12,000 in deductions, $3,600 in tax savings. You earn $6,000 at the end of the year. Now, that may not sound like a lot, right? But how much money would you have to have invested in order to get a $6,000 return, a $6,000 return? Well, at 1% interest, right, you would have needed $600,000 to get a $6,000 return at the end of the year. At 3% interest, you would have needed $200,000. And at 6% interest, you would have needed $100,000 in an investment throughout the year to earn $6,000. Now, I don't know about you. How many people do you know that have $100,000 laying around to put into an investment for a full year? Not many, right? So doing a little home-based business, right? Your number one asset, we're able to take $12,000 additional in tax deductions, right? In deductions, money that we were already spending on our mortgage, our utilities, our cell phone, our business mileage, our meals, our internet. We were able to deduct $12,000 from our income, which gave us a $3,600 tax savings, right? We made $2,400 on our business. We add the $3,600 in tax savings, $6,000 at the end of the year in income. Now, what if we took that $6,000? Let's go a little bit further here. What if we took that $6,000 and we invested it, right? Now, remember in lesson 2, I taught you the banker has a secret. So I told you I work with the company. I have access to professionals that show us how we can invest our money like the bank and earn a larger rate of return. Okay? Now let's say you've done that and you're able to earn 8% on your money and you put $6,000. You put this $6,000, this little amount of money here that you got from $2,400 in business income and $3,600 in tax savings on expenses that you were already paying anyway, right? And you invested at 8% interest. In 10 years, right? In 10 years, you would have $91,403, right? And by the way, at the end of this video, if you want, leave a comment below, and I will show you how you can start a home-based business today for just $228, right? Just $228 to make that $6,000 at the end of the year, right? Getting back to the example here, at 8% interest, that $6,000 would become $91,473.02 after 10 years. And after 20 years, you would have $294,510.21. after 20 years. So that obviously assumes that you're taking this whole 6,000 you make every year and you invest it, and you know how to invest that money, and you earn an average rate of return of 8% interest. So this is your number one asset, guys. This is lesson number 4, your number one asset, the power of a home-based business. Okay. This is how you use a home-based business to reduce your taxes so that you have tax savings and you get additional money back. Without a home-based business, in this example, you pay $3,600. You lose this $3,600 here every year. Every year, it's going to the government, right? $3,600. That's about $300 a month. Every year, you're overpaying by $300 a month, right? I told you on average at the beginning of this lesson, most people on average are overpaying by $500 a month. In this example, you would overpay your taxes by $300 a month without a home-based business. So that's why it's so important to have one. And like I said, if you want to know how you can start one today, comment down below this video, send me a private message. I can show you today how you can start a home-based business for just $228 today that will be able to earn you, like I show in this example, $6,000 a year for just $228 startup. How much do you think it costs to open up a restaurant? How much do you think it costs to open up a McDonald's? How much do you think it costs to open up a laundromat, a car wash, a video store? How much do you think you would have to put up to get that business started? Today, I could show you how to put up $228 to get started today to be able to make that $6,000 per year. Actually, we could show you how to make a lot more. So again, this is Bill Soriano from Pittsburgh, Executive Director with MWR Financial, Making Wealth Real. This has been lesson number 4, your number one asset, the power of a home-based business. So I'll be coming out with the 5th and final lesson probably sometime next week. Until then, let's make wealth real, guys.